Private sector economists are now more optimistic about Singapore's economic performance this year. According to Monetary Authority of Singapore's or MAS latest quarterly survey of professional forecasters, GDP is expected to grow by 4.7% in the fourth quarter, up from 3.4% in the September survey. They also raised their growth forecast for 2013 to 3.8%, up from the 2.9% previously. This comes after the city-state's economy outperformed expectations in the third quarter. Economists' growth expectations are in line with MAS' full-year growth forecast of 3.5 to 4%. Inflation for 2013 is expected to ease slightly, with headline inflation forecasted to fall 2.4% compared to 2.5% in the previous survey. And MAS core inflation is expected to come in at 1.7% this year, slightly lower than the 1.9% in the last survey. Going into 2014, economists raised their full-year GDP growth forecast to 3.9%. Meanwhile, headline inflation is projected to come in at 2.8%, core inflation at 2.3% next year. And to help us crunch numbers, PK Basu, chief strategist from realeconomics.com, joins us. Thanks for joining us again. Now, everything up, GDP for the quarter up, forecast for the year up. What are the main factors?
The main factor is the improvement in the manufacturing sector. The manufacturing sector began to recover quite strongly in the third quarter, and that momentum is likely to continue in the fourth quarter and at least into the first half of next year. What's behind that is a pickup in machinery and equipment investment, which was long in coming, but there was a nice pipeline of investment commitments. There was a mystery about it not actually translating into a pickup in machinery and equipment investment. That finally did come through in the third quarter, and I think it's likely to continue for at least another 2 or 3 quarters. So I'd say until the first half of next year, the skies are blue, and we're likely to see a clear strengthening in Singapore's economic performance, helped by an improving global economy and particularly an improving US economy.
Now, besides manufacturing, any other stars that's lifting this?
Well, I think the main improvement has come in the manufacturing sector. It is a cyclical sector. It is subject to quite a bit of cyclical ups and downs. The other sectors, construction has seen a gradual loss of momentum, and I think construction will be a bit weaker over the next 2 or 3 quarters.
Especially with the HDB announcing the slowdown on some of their projects. Right?
Yes, and if you look at things like contract awards, they were very weak until about 3 or 4 months ago. Contract awards are about a 1-year leading indicator of actual construction activity. So until the middle of next year, we're likely to see a weakening of construction. There are some signs that in the second half of next year, construction will pick up. So we have a nice mix. In the early part of next year, we should see machinery investment drive the economy, which will boost productivity and require less workers, foreign workers in particular. In the second half, we'll probably need a bit more of a construction-led boost. Okay. So I'd say the forecasts that you're now seeing are probably still a bit too pessimistic, both for the fourth quarter this year and for next year's numbers. I think next year, we should get about 4.5% real GDP growth.
Speaking of being optimistic, the services industry, they'll be hit by, labor tightening. Where do you see that going next year?
Well, yes, the services sector, parts of the services sector, particularly hotels and restaurants, are very dependent on foreign labor, and the government is putting sand in the wheels of the inflow of foreign workers. So to that extent, costs there will probably go up a little bit, and those parts of services will probably not do as well. But the services sector also includes financial services, it includes business services. Those are areas that are seeing good growth. There is a secular pickup in things like private banking, in things like business services, consulting, and so on. So I think those segments will remain quite strong and are not as dependent on low-skilled foreign workers.
Okay, let's look at inflation. Is going to ease this year, possibly, but it says that it's likely to go up next year. Any possible reasons for this?
Well, I don't see any particular reason for inflation to pick up to the extent that the survey suggests. I think inflation will stay fairly moderate, particularly in the first half, because of the very high base in the first half of this year. So I think inflation will stay at or below 2% through the first half of next year. It'll probably pick up a little bit in the second half. The reason for that really is that the second half will be less productivity-driven growth. If you have productivity-driven growth, unit labor costs are well contained, and you don't get much of a pickup in inflation.
All right, Basu, very quickly and lastly, going into 2014, which is a few days away, any global headwinds we should be looking out for, that given Singapore is a very open economy?
Well, I think the global winds are positive. There's a nice tailwind likely to come particularly from the US. The US has just seen a budget deal. So thank goodness. We're about to see significant progress on the fiscal front in the US. That takes away one important cloud. The US labor market is improving. The forward-looking indicators like the ISM manufacturing and non-manufacturing, particularly the manufacturing new orders, are very strong. So all of that points to an acceleration of economic activity in the US. Some of the clouds over the China economy have begun to go away as well. There are still some important clouds over the asset bubbles and so on in China, but it does appear that China should get 6 to 7% growth at least in 2014. So with the US doing well, Japan continuing to see the Abe recovery continue, and China in reasonable shape, I think the global backdrop is quite good for Singapore, and next year should be a better year than both this year and last.
All right, Basu, thanks. Always a pleasure to have you with us. PK Basu, their chief strategist from realeconomics.com on the expected performance of Singapore's economy.